Okay, remember, the key to all of this is momentum. And again, you have to think about this all from a practical standpoint. Okay, if traders, remember the example from the last webinar where we had the house for sale. And the reason why I keep mentioning this house is, my wife and I have some real estate here in Phoenix that, Phoenix is probably like most real estate markets. It's not moving as quickly as it used to. That's why I've got houses on the mind. And so if you're trying to sell a house for $250,000, and all of a sudden you have, again, the Walmart's moving in, your house is going to be right in the middle of the checkout stands. So you know that Walmart has to buy your house. You know that you're going to be able to get a better price for the house. So the price is going to go up. Okay, and it's going to go up fairly quickly. But it's going to get to a point where, let's say you all of a sudden say, okay, I want $1 million. I want $1 million for my house instead of $250,000. And that represents this price right here. Well, you're probably going to get no takers for that, right? So the price is going to start coming back down. And the market works in a similar fashion. As long as there is an increased demand, as long as there's a reason and a catalyst for price to start moving up, in other words, there's a fundamental announcement that comes out, and you see that traders are all of a sudden saying, "Oh my goodness, the pound it's worth a lot more than 98.40, so we've got to push price up." Well, I'm sorry, they don't say we have to push price up. We have to own it, is what they're saying. And the reason why they say we have to own it at 98.40 is because they know, well, it's probably worth between 99.10 and 99.30. That's a big range. So they come in. All of a sudden you see, 100 million to buy, 50 million to buy, 500 million to buy. So all of a sudden these big orders start hitting the market. So what do the market makers do? The market makers, they tell this guy, okay, well, we can get you 75 million done at 98.60, but if you want the rest done, it's going to be at 98.65. They tell this guy, well, we can get you some done at 98.65. You're in front of this guy. Now, this guy who still has 25 million to go, he's saying, well, crap, I can't get 98.65 now. Let me go 98.67. So he gets filled at 98.67. This guy comes in with 500 million. The guy says, "Oh, I can't give you any at 67. I can give you 100 million at 98.70, and I can give you another 100 at 98.72, and then I can fill you the balance at 78." They say, "All right, just get me done." So all of a sudden, very quickly, 72, 73, 75, 78. So with just 3 people coming in the market. Apologize, I had a little bit of a cramp there. With just 3 people coming in the market, all of a sudden this thing is way up here. Now how can you see that on the chart? How do you know that that's going on? Look at the size of this bar. All of a sudden, boom! Traders are just pouring into the market. All of a sudden here, boom! You have big orders coming in. So the market makers have to push price up. Now, again, why is this momentum important? Well, it's important because when you see this kind of momentum come in, there's usually a reason for it. Okay, that when the markets, even in the stock market, when prices move, there's typically a reason for it. Now, those reasons aren't always valid, and it doesn't mean that the move has to continue, but that's why we use the tools that we do. So, we see the market pushes up. And there's a lot of momentum behind it. Why do I want to see this momentum here? Because I want to see that traders come back in and they say, okay, these guys over here were just a bunch of suckers. And these people over here were just dead wrong. There's no way price should be this high. So these guys do the opposite. They come in with 100 million to sell. So these guys are all of a sudden selling. 100 million to sell. 50 million to sell. 500 million to sell. All these big orders come in. So what are the market makers going to do?